You're listening to The Voluntary Life, where you can hear ideas for finding freedom in an unfree world. Visit thevoluntarylife.com to connect with the show and hear all past episodes. Here's your host, Jake.
Hi everyone, it's Jake here. Welcome to The Voluntary Life. This week's episode is about finance and investing, and in particular, it's about managing your investments and tracking your investments and some of the calculations that you might find it useful to do to keep on top of your finances. This will be of interest if you are just starting out with investing, or if you're further down the road on the journey to financial independence, or if you already are financially independent and you're managing investments as you live from your investments. So what I'm going to do is talk about some of the calculations and tools that I use to track investments and the way that I do it on a monthly basis. Before I do that though, I have a big request to you, especially if you are a long-term listener. Please do support The Voluntary Life by becoming a patron of the show on Patreon. You may not be aware when you hear me thanking new patrons that as time goes by, some people who've been long-term supporters of the show stop funding the show on Patreon, and I definitely need other listeners to step up and help support the show to take their place as some people drop off. So I really do need more help. Patrons help to fund the editing and the hosting and all the other things that make the show possible. And I still have lots of great plans to improve and expand the show, and I really do need your support. So please consider becoming a patron. You can find out more by clicking the link that's directly in your show notes, which you can access on your podcast player, or you can go to my website, thevoluntarylife.com, or directly to my Patreon page, which is at patreon.com/thevoluntarylife. And if you do become a patron, you'll get bonus episodes and many other rewards. This week's bonus episode is about storing all your data in the cloud and using encryption to keep your privacy. And if you're interested in living a minimalist lifestyle, especially doing lots of travel as I do, then this is one of the practical challenges that you have to overcome of how to benefit from the cloud, but also use encryption while you're traveling around. As I record this, I'm also looking forward to another live stream that I do with my patrons once a month. So the next one's just coming up. So those are some of the great benefits that patrons get, and please consider becoming a supporter of the show on Patreon. So on to this week's episode. I'm going to talk about some useful calculations to do on your investments, in particular if you have an investment portfolio and if you have savings, and some of the things that you might find it useful to calculate as part of your monthly financial review. I've done a couple of other episodes that are relevant for this topic, which if you haven't heard them, I recommend checking them out. And I'm going to try and not repeat a lot of the content in this episode that I've already covered in those. So that's why I think you could find those interesting. The ones that I think are relevant are episode 181, which was Financial Independence Part 1, What You Need to Know About Your Money. And in that episode, I talked about some of the useful things to calculate, such as budgeting and calculating your net worth. The other episode that you might find interesting is episode 219, How to Do a Monthly Financial Review. And there I talked about the process of downloading data and running the sort of budget tracking and different kinds of reports and things that I run as part of the monthly financial review. So in this episode, I'm not going to focus on the things I've already talked about with the monthly financial review, like budgeting and that kind of thing, but I'm really going to focus on investing and some of the things I calculate about my investments on a monthly basis, just to keep track of my portfolio and to keep track of what I'm doing with my money. The first thing that it's worth tracking when you are tracking your investments, I think, is just your overall net worth and how it has changed month on month and year on year. Now, I've spoken quite a lot about this in previous episodes, so I'm not going to go into a lot of detail on this. But when it comes to investments, if you use a piece of personal finance software, then it's fairly easy to update the value of your investments and to get the finance software to tell you your net worth and to show you how it's changed. The one that I use, Banktivity, will give me a graph of net worth over the last year and will show me what the percentage changes are month on month and whether it's accelerating or decelerating as it goes up or down or whatever. And this is obviously just a useful thing to know. Well, what is your net worth? What have you actually got? Especially if you're working towards financial independence. So that's a great first thing to track. And I've spoken about that on the episodes that I've put links to in the show notes, so I won't go into a lot more detail on that one here. Now, I've mentioned this before, but I think it's worth mentioning again, that especially when it comes to investments, I find it really helpful not to look at my investments too much. When you start investing, it can be very tempting to track them the whole time, but I think it's much better to set aside specific time to look at how things are going, and then in between those times ignore your investments and get on with your life and do something productive rather than watching lines on a chart go up and down, which is totally time wasting and doesn't really help. And so how often should you look at your investments? Well, I've decided for me it's once a month, and that's all I want to do to track my investments, and I don't look at the numbers in between then. And when I do look at the numbers, I'm not looking at my investments just to see, how much money have I got and how much are they worth. I'm looking to see, is there anything I need to do to stay on top of my investments? Do I have any actions that I need to take? Now, this will be different for you depending on what your particular approach to investing is, but I'm a passive investor, and as I've mentioned in previous episodes, I follow a passive portfolio strategy called the permanent portfolio, which was one set out by Harry Brown in his book Fail-Safe Investing. And the idea of that portfolio is to hold 4 different types of investment: stocks, bonds, gold, and cash, and to hold them in 25% equal splits, and then just to rebalance those investments over time if any one of them becomes worth significantly more or less than the others. So there is a rebalancing band of 15 to 35%. And basically I buy or sell investments to rebalance my portfolio if any of the one asset classes that I'm holding becomes much more valuable or much less valuable than the others. Now, rebalancing is a concept that you will need to use even if you're using a strategy that invests in very different things to the permanent portfolio. But if it's a passive investing strategy, then you're going to be investing in some series of investments, and you're going to want to have some roughly set rule about what percentage and what share of your investments you want in each of these asset classes. So, for example, some of the other very well-known investment portfolios are things like people holding 60% stocks and 40% bonds, or 80% stocks and 20% bonds, or some mixture of stocks and bonds, and maybe there's some percentage of cash in there or something like that. Again, if you're interested in different approaches to passive investing, I really recommend the website portfoliocharts.com. I've interviewed the creator of that website on a previous episode, and I'll put a link to that in the show notes as well. But once you've chosen your own approach to investing, you're going to have investments in different asset classes, and you're going to need to potentially rebalance. That is, sell the high value ones at some point and buy the currently cheap assets so that you rebalance your portfolio to keep in line with your strategy. Now, that's all background information to explain that what that means on a practical basis is once a month, I have a check to see, do I need to rebalance my portfolio? And the way that I do that is by using a piece of personal finance software, and I use Banktivity on the Mac to track all my investments, and a simple spreadsheet to look at whether I need to rebalance. Now, I'm not going to go into detail about how I use the personal finance software, because I've done that in the previous episodes that I've mentioned, and there'll be links in the show notes. But to cut a long story short, within my personal finance application, I track my investments, and I can update the value of investments by checking their prices on the internet and updating the values. Some of them will update automatically, and others I have to do manually. And then I can get the personal finance app to tell me what the value of my investments are. And it will tell me, you have this much value in stocks and this much value in bonds and so forth. And then what I do is I simply put all those numbers into a spreadsheet. I have a template for it that I've set up, and I categorize the different asset classes in the way that I need them to be categorized to fit with the permanent portfolio. And then I just simply look at the percentage split in my portfolio and I see, have I hit a rebalancing band? Are any one of my investments worth significantly more or less? Now, as I mentioned, in my approach, it's 25% each for 4 different asset classes, and the rebalancing bands are at 15 and 35%. But you may have a different setup. If you're using 2 asset classes and your percentage split is supposed to be 60-40, then I guess you'll have to decide how much more than 60% is one allowed to go, or how much lower than 60%, and at what point do you rebalance. This is something that I do once a month, and I use a spreadsheet. And I also have, within that spreadsheet template that I use, I have a little rebalancing model that I've set up. It's just a spreadsheet model, and I just work out how much would I need to sell of each asset class in order to bring it back to 25% each. So sell and buy. And I use the spreadsheet to say, well, if I sold this much in shares and bought this much in bonds or whatever it happens to be in any particular time, that would be enough to bring my portfolio back into balance. Now, this is something that is kind of useful to keep an eye on and track doing, because obviously when you sell any investments, depending on where you're holding them, you may have capital gains tax and other things to take into account. So that's something I need to be aware of. And so I track this on a monthly basis, but I'm kind of aware of what my constraints are in terms of tax and the tax year and things like that, so that I can be somewhat strategic about thinking about when am I going to need to rebalance, and do I need to do anything in this tax year, or should I wait until next tax year, and that kind of thing. So that's one of the useful things that I do with my portfolio tracking. It's a rebalancing check. And the purpose is to find out, do I need to rebalance my portfolio? And the tools that I use are a basic bit of personal finance software and a spreadsheet model. Another thing that you might find interesting to track on a regular basis is the split between your core investments and what you might like to call your speculations. In the approach that I follow, the permanent portfolio, Harry Brown, the inventor of this approach, set out quite a clear strategy to say you have something that you call your permanent portfolio, which is money that you are depending on, if you like. And then you have money that you're kind of speculating with, that it's not a fixed passive investing strategy, it's a speculation. And some people are very strict about being passive investors and they don't speculate at all. And other people have a bit of speculation and they just see, well, maybe I'll also invest in something else. You may find that there are some assets that you invest in that aren't, strictly speaking, in line with your investment strategy, but they are investments. I mean, for example, if you buy a house, then the value of the house itself could be an investment. You could also have a liability, which is your mortgage or whatever. But bearing all of this in mind, it is useful to look at the split between your passive investments and your speculations. So in my strategy, that means the split between the permanent portfolio and what I call the variable portfolio. But you might like to think of it as the split between your passive investments and your investment in a house or other speculations that you think are worthwhile investing in, but are not really part of the strategy that you're following. And I track that just to see what is going on with my investments. I don't really speculate very much at all, but I still find it useful just to see what's happening in that split. And when I did own a house, that was obviously quite a significant part of my investment portfolio. And so it's kind of useful to keep track of all of those things. Another thing that I find it very useful to track with my investments is the investment return that I'm getting on my portfolio. And this is something that I don't do every month, but I do it once a year. I basically calculate what return did I get on my portfolio as a whole over the year. Now, this is especially useful for me because I am living from investments. So it's very important that I get enough return on my investments to support the money that I spend in the year. And also, because I'm living from investments, I'm looking for clear, predictable returns that I can work out a budget for and work out what I'm able to spend. So I've spoken about this on previous episodes, but there's a very rough and ready rule, which is that if you're living from investments, you should be able to spend 4% of your investment portfolio and continue to live off that 4% indefinitely, because your investment returns should be enough to take care of the money that you're spending, but also the loss of value through inflation and so forth. Now, this is something that it's really worthwhile tracking, particularly if you've adopted a specific investing strategy and you want to see whether it's giving you the kinds of returns that you expected over time. And there are many websites where you can check individual portfolio strategies and see what their average compound annual growth rate has been, what their average returns each year have been. I've mentioned it before, but portfoliocharts.com is a very good site for looking at that. But if you have your own investments, then you might also have some kind of unusual things in your investment portfolio, like, for example, maybe your house or other investments that are not part of a strategy but are still assets that you have which can increase or decrease in value. So it's worthwhile seeing what kind of return has your portfolio given you each year. And you can do that quite easily by calculating the value of your portfolio at the beginning of the year and at the end of the year, and also looking at the amount of money that you've taken out of the cash part of your portfolio, and just keep track of what your investments returns have been and compare them against inflation and inflation expectations for future years, and compare them against your spending as well, and see whether or not you are getting the kind of return that you would expect if you one day want to live from investments, or if you're already living from investments. There are a number of other things that I track on a monthly basis that are related to investments and related to personal finance, but I think I've gone into quite a lot of technical detail in this episode already, so I think I'm going to leave it there. Obviously, what you do with your money is your responsibility. I'm not a financial advisor, and I'm only explaining to you what I do as someone who's learned about personal finance for themselves. So do your own research, and obviously take this all as just information that you should consider food for thought. You might not choose to calculate the same things as me, but hopefully it's helpful for you to hear the kind of things that I'm calculating, so that as you get into investing and you're thinking about your investments, you're thinking about what you're tracking and why. So I hope you found that helpful. I'd love to hear what you think. Let me know if you think there's other useful things to track about your investment portfolio and your savings. If you found this interesting, don't forget to check out my 2 books on Amazon, and you can also find links to them on my website, thevoluntarylife.com. They are Becoming an Entrepreneur, How to Find Freedom and Fulfillment as a Business Owner, and Job Free, 4 Ways to Quit the Rat Race and Achieve Financial Freedom on Your Terms. That's all for this week's episode. I'll be back next week with another episode. In the meantime, I hope you have a great week.
Thank you for listening to The Voluntary Life. If you like this podcast, please show your support by becoming a patron of The Voluntary Life on Patreon. Your support will help to grow and improve the show, and you'll get access to a treasure trove of rewards, including bonus episodes. Visit thevoluntarylife.com to learn more.